But it is time for us to hit social media for our hashtag segment. For that, we'd like to welcome in Megan Brantley, the VP of Research at LikeFolio.com. Good morning to you, Megan. We also have Fast Market contributor Jenny Horn alongside us as well. Jenny, we're talking another company that's really been affected by this so far, and that's Nike.
It's Nike. So they're down 2.25 today, alongside the broader market like we all just talked about. But if you look at just a monthly chart of Nike from the end of January to now, Nike is down about $20. And this is because, China, the region of China is super important for Nike. We talk about it every time we're on the show, every time Nike has earnings. China is easily one of the most important regions for Nike. It makes up about 15% of its total revenue and nearly 40% of the company's profits in just 2019 alone. So this is a huge deal for Nike. China has also been its fastest growing region. It accounts for about 1/3 of the company's growth over the last 3 years. So obviously the coronavirus headwinds has been a tragedy for Nike, but it's one of those things on social media people love to hype up. You talk about, of course, coronavirus and Nike, and it's just a very hyped conversation. So that goes into my first tweet, which says, how low will Nike drop when they announce sales in China will be down 30+%? LOL, come on, man. This should be down 15%. No one else in apparel has more direct customers in China. Be honest, you're taking a major sales hit right now. So Megan, I know that your data, of course, only tracks English-speaking tweets, but I have to think, even in the United States, this is weighing on Nike's purchase intent.
Whenever we look at Nike, as you mentioned, we do track mentions of consumers talking about buying one of their products. So they could be buying, some of their running pants. They could be buying some of their tennis shoes, maybe the Jordan brand. And what we see overall is actually strong consumer demand for Nike. I think that this is really significant whenever you look at how Nike is performing, especially to their competitors. You're looking at this purchase intent line right now, and we're seeing it pacing about 13% growth year over year, which is what you like to see. So we're not seeing a testing of at least English speaking and, mostly American mentions of the Nike brand yet. Whenever you look at competitors like Under Armour and like Adidas, these are negative year over year trajectories. So Nike's definitely the leader in its space.
Hey, Megan, JJ, how are you?
Good.
Do you guys see anything out there, though, in terms of the manufacturing side for Nike? And in terms of a potential slowdown there, so if to your point, if the consumer demand stays pretty good, will they have trouble filling those orders? Is there anything that measures that?
I think that that's really valid. One thing that we do measure, we have a fear index, I think that we're going to be talking about later, and we can see that investor fear start to spike a little bit just across the board when you're talking about the overall market. Obviously, this is not news. We're also tracking the coronavirus, and so we are seeing that this is increasingly on consumers' minds. It's on investors' minds. So far, it hasn't trickled into impacting actual demand for Nike products specifically, but I think that that's definitely something that investors are going to have to take into account as they consider, long-term, what's going to be the overall impact on these companies.
Megan, we heard from Foot Locker this morning. Foot Locker actually getting a little bit of a relief rally here, up $2.26. We talked to Andy and we talked to you, we talked to Landon all about kind of Nike's impact on Foot Locker. When there is a little bit of a slowdown, maybe in their direct-to-consumer channels, particularly in China, is that a good thing for something like a Foot Locker? Are they going to leverage those wholesalers more for these, or do you have any thoughts on that?
I think that Nike actually has a pretty nice direct-to-consumer footprint in China. When we look at Foot Locker, we think that they're definitely feeling the pain of Nike kind of amping up this direct-to-consumer game. I think their same-store sales were down. The chart you're looking at right now, this is an example of a Nike's strength aside from their direct-to-consumer. So this is the Jordan brand, and you can see the mentions are just on fire for this brand. And so this is what you want to see. We don't see this strength in competitors. So, if you're trying to pick out a winner in this sector, I think that Nike's positioned itself well long term, but obviously it does have an extreme exposure to China, as Jenny mentioned.
Yeah, and that exposure to China is obviously important, but when you look at that chart against its competitors, Nike is still, the demand is still there. We've talked about these athleisure companies for the past year. They were all 2019 winners, so I have to think in a market where everything is down, Nike could still be one of the winners of a down market. People are still going to wear Nike shoes. The Jordan brand is still very cool. I feel like this is still a brand people won't stop wearing. But that goes into my next tweet a little bit, which says, net income over the last last 10 years, Tesla -6 billion, Nike 30 billion. Free cash flow over the last 10 years, Tesla -9 billion, Nike 27 billion. Tesla market cap 161 billion, Nike market cap 159 billion. So I love this comparison to Tesla. I mean, a name we can't stop talking about due to its growth over the last, say, 3 months. But I mean, when you look at Nike at a longer term, what's the future for Nike? Because this obviously talks about the previous 10 years. What's the next 10 years? Because it's comparing it to a name like Tesla, a growth story. Is Nike's growth story going to continue, do you think?
You know, I think that right now we're definitely not showing any signs of weakness. We're seeing them emerge as the leader in their space. You know, you can't even compare Nike and Adidas and Under Armour on the same chart because the mention volumes are so different. So I think that what Nike is doing is working. I think that they're being really effective in transitioning and building out this direct-to-consumer platform. You know, this chart that you're seeing are mentions of people, you know, making purchases on Nike app or on their sneakers app. And, you know, we have to plot this on a 365-day moving average because the spikes are so large on the day that Nike drops new items. And so that's something that you like to see, that people are, you know, they're engaging directly with the brand itself.
Yeah, and so Megan, obviously it looks like a lot of good news in terms of the data that you're tracking. We know that this macro story is kind of weighing on every single company out there, so Nike is going to be affected, as is everybody else. But we have earnings coming out March 19th, so still 2-3 weeks away here. We'll probably talk some more Nike then, but kind of what you're tracking so far on this quarter. Are we looking to have a pretty strong quarter going into earnings still, even in spite of what's going on with the coronavirus?
You know, from the English-speaking consumer and from the pool that we're looking at, demand is strong. But I think that it's so important to monitor, you know, how much is this virus going to impact their ability to deliver, and also just the growth that was previously driven from that area. So I think that's still a huge unknown that we're going to have to watch through the end of quarter.
And if Kevin Hanks were here, he'd be talking about his Nike waffle trainers or something.
Yeah,
I have to channel my inner Kevin Hanks.
1945, I think that came out.
Exactly.
I hope to God you don't have an inner Kevin Hanks.
All righty, Megan. We'll be talking to you guys this afternoon on a special fast market as well. We'll talk some macro stuff with Harrison, but thanks for joining us and have a great weekend.
Yeah, thanks, guys. Y'all too.
All righty, we're going to take a quick break. Thanks to Jenny as well.